and then give me a message when that's up and running. Thank you. Right, Chair, the live stream is up and running. Thank you.
Thanks, Alison. Good morning, everyone. My name is Councillor Lee. I'm the Chair of the Audit Committee. Welcome to this meeting, which is on the Wednesday, 27th of January. Do we need to introduce everyone? Are we okay with that? Yeah.
I'll go through and do a roll call for you, Chair, if that's all right.
Please.
Just to ensure everyone can hear. Right, so listed in this meeting, I've got present Councillor Durham, if you could just indicate you can hear us.
Good morning.
Thank you. Councillor Baldwin.
Morning.
Thank you very much. Councillor Cruddas.
Morning.
Thanks, Councillor. And Councillor Lee, obviously you're present. I've got apologies from Councillor Paley, and unless anybody has apologies from Councillor McEwen, I will mark him as absent. And officers present will be introduced, obviously, as the reports come in, but we have Peter Carrick, Andrew Barber, Lee Downey, apologies from Luke Swinhoe, and we also have with us Helen Helshaw from Ernst Young. Thank you.
Thanks, Alison. Do we have any declarations of interest? No hands, none. Can we approve the minutes of the committee meeting, which was held on the 28th of October 2020? All in favour? Okay. Thank you. And the special meeting held on the 18th of November. Are we all happy with that? Councillor Cruddas?
Yeah, I'm saying okay, yeah.
Sorry, thank you. Thank you. Moving on to item 4, the annual audit letter on pages 7, presented by Peter Carrick. Peter?
Yeah, thank you, Chair. The annual audit letter provides a high-level summary of the results from the 2019-20 audit work undertaken by Ernst Young. It's effectively a summary of all of the annual audit report you got at the last meeting. Helen Henshaw from our external auditors, Ernst Young, is going to present that, so I'll just hand straight over to Helen, please, if you don't mind.
Thanks, Peter.
Thank you, Helen.
Thank you, Chair. So as Peter mentions, the annual audit letter is a document which regulation sets out that auditors are required to provide to audit committees at the conclusion of the external audit each year. In actual fact, the information contained within the annual audit letter is for the most part not new. So when I last saw the audit committee, you'll remember that I presented our audit results report for the year just prior to the point where we were to sign the audit opinion on the financial statement. So that audit opinion was signed, and the conclusions that I already talked you through were enacted, if you like, in that audit opinion. So this annual audit letter just really summarises the exact same content that you saw at the last meeting in our audit results report. So I was proposing to take the report as read. Happy to answer any questions that you might have, but there's no new content in the body of the report. The only element I want to just draw the committee's attention to, which is new information, is at the very back of the report on page, sorry, my document is being slow to scroll through here, but on page 33, as it's noted in your pack, it's actually page 25 of our report, but page 33 is labelled in the pack. We have the final fee information for the year, and you will note that there was a scale fee variation for the audit for this year to take into account the additional costs of conducting the audit this year. You may or may not be familiar with the way that the PSAA, or Public Sector Audit Appointments contract, works, but effectively, if there are elements of the audit which incur more cost for one reason or another, the route to negotiating the recovery of that fee from an audit perspective is we will be quite transparent in terms of how those costs arose, discuss that and agree that with management, and then that goes to as a submission to Public Sector Audit Appointments Limited for them to have the final say on that amount. So for complete transparency, that is contained within page 33 there. There are two elements to it. So the base fee for the work, as communicated at the outset by PSAA, is £71,813. You'll be aware from previous conversations we've had at the Audit Committee that there is a move in the sector more generally to try and rebase those figures to be more realistic of the input costs of conducting an external audit in the regulatory environment as it exists today. We believe that uplift should be in the region of 25,000, which is the 25,087 figure you see there. That has not been agreed with management, and that is for separate debate with the PSAA at a more national level, to be perfectly honest. But in order that you are able to see the quantum of that, I've included it within this report. The figure of 13,317 is the specific items which have required more work this year in terms of the delivery of the audit, and that is the figure that I've specifically talked about and agreed with management, and we've put to the PSAA for them to provide final confirmation. And at that point, Chair, I think it's probably appropriate that I ask if there's any questions.
So can I just summarise that in my simple terms?
Yeah, sorry.
I is saying the £25,000 is not a decision that this committee or the council can make. The cabinet can make.
It could be made at this level, but management's view is that it would be more appropriate to pass that decision up to PSAA and make sure that it's in line with the national conversations that are going on, because that conversation is happening, Chair, at every council across the country.
Okay, and the 13,000 is a similar kind of...
The 13,000 can be agreed locally because they're specific items which were incurred this year, and the management and ourselves are completely clear as to what drove those costs.
But is that a decision to be made by the Audit Committee, or is that Cabinet?
That decision, I believe, is made by management, and it's just here for your information. So the delegated responsibility for making that decision is to Elizabeth as Section 151 officer, I believe.
Okay, so as far as this committee is concerned, it's just to keep us involved.
Correct. Yes.
Okay, informed. Sorry.
Yes.
Right, members. Are there any questions from the report from Helen? Could I ask her one? I should have really asked it before. On our page 20, it refers to some costs which I know you've corrected. It's an overstatement there of £413,000 on page 20, on our page 20, and a reference to an overstatement of 1.4 million relating to the valuation of the Railway Museum. I mean, what's the implication or consequences of these errors? Had they not been made, had they not been seen, or had you not picked them up?
Because of the nuances of the way accounting for capital occurs in a public sector set of accounts, valuations of assets actually don't have really any impact at all on the outturn of the council. So it impacts the reserves position and where figures sit on the balance sheet. But in terms of whether the council has a surplus or deficit for the year, it makes no odds really. And in terms of cash flow, so liquidity, it makes no odds.
Fine. So in other words, there's no additional risk by making those errors?
Not particularly, no.
Okay, thank you very much, Helen. Can we move on to accounting policies to be applied to the 2021 financial statements? And again, I think this is you, Peter. On page 35.
You're going to get sick of me today, but yeah, this is my second one. And the purpose of this report is to update members on the accounting policies to be applied in the preparation of the 2021 Statement of Accounts. I can refer you to page 36 in the pack. One of the responsibilities of the Audit Committee is to review the annual Statement of Accounts, as you know, prior to approval, and also specifically to consider whether appropriate accounting policies are being followed and whether any concerns arise from financial statements that are being brought to the attention of the council. So this is, I think it's just good practice really to have the accounting policies that we're going to use in the Statement of Accounts brought to the committee so members can see what the policies we use. And these are not my policies, they're not the council's policies, these are normally SIPA policies, which is like the accounting body. So we just follow them, I Darlingtonise these, if you like, the accounting policies, but they're basically standard policies that every council follows. So it's just good practice to sort of bring them to members for them to sort of see which ones we follow. And there's effectively no change from the ones we used in last year's accounting policies in the accounts. So it's just for sort of said for recommendations for the committee to review the accounting policies and approves their use in the 2021 final financial statements. I'll take any questions on it. If anybody's got any questions on any of the accounting policies, I'll obviously try and answer any. But
questions, members? No, I think the important thing is one of the questions I had was if you to explain any difference between last year's and this year, but you've obviously answered that. Thank you.
There isn't any differences at the moment. It's a quiet year, to be fair, in some ways.
So, members, the recommendation is that we review the accounting policy and approve their use in the preparation. Are everyone happy with that? Yeah. Thank you, Peter.
You're on mute, Chair. Sorry, you're on mute.
Thank you. Yeah, so moving on to the next item, which is the final accounts timetable for the year ending 31st of March 2021, starting on page 57. Peter?
Again, yes, that's me, Chair. This again, it's just good practice, really, to bring our final accounts timetable for the year, for like the current year we're in now, for the statement of accounts, so members can see that we actually have processes and procedures in place to close the accounts on time and produce everything we need to produce. The only thing I would bring to members' attention is on page 59, and it's at the bottom of the appendix 1. Now, I'm going to come on to this in the next item, but I will mention at the moment that members can see the Audit Committee date at the 30th of September. Now, it's normally at the moment, it's actually, as members know, it's the 31st of July. But due to COVID, and again, the review I'm going to come on to next, the recommendation is that they move the actual date of for approving the accounts to the end of September. So just to bring members' attention, I will go into it in more detail in the next agenda item, please, Chair.
Right, thank you. Does any member have any questions on this item? Don't see any. So once again, we ask the note.
Chair, sorry,
Councillor
Baldwin. No, it's all right. I know Councillor Baldwin and Councillor Cruddas have both got their hands up in that order. Thank you.
Councillor Baldwin.
Okay, thanks. Just a question for Peter. Will these accounts need to be signed off by the chair? Because if they are, this is the time of year when, I hardly dare say this, perhaps all restrictions on movement will be lifted and people might be taking holidays, etc. If some of these have to be signed off by the chair, do we need to nominate, and I'm not volunteering, but a vice chair just in case people are away on holiday or dates creep up on people? Thanks.
I mean, I think I can answer that, Chair, Councillor Baldwin. Yeah, I think we actually have a vice chair, because I think it was voted on at the first committee meeting we had on this. So we do have a vice chair, and Councillor Cruddas is waving his hand there. So, but you're right, the people are on holiday, but it's going back to the old days, I suppose, when you were chair, to be fair, Councillor Baldwin, where we did have to sign them off in September. So yes, the chair does have to sign the accounts off.
Thank you, Councillor Baldwin. Councillor Cruddas.
Yeah, thanks, Chair. Peter, I think that's right. I was on the Audit Committee when this date was pulled forward to the July, and actually it meant that you had to do lots of things a lot quicker.
Yeah.
Presumably, you're still trying to do things a lot quicker, as these things tend to be pushed around by government. So, are you trying to keep to the same schedule of doing your work, and you know, in the preparation for some time when they'll want to pull it forward again? Yeah.
I mean, again, I've alluded to that. The next item sort of explains it all, but I'll just sort of give you a bit more background to it. You're right. We did sort of 3 or 4 years ago. We did do a lot of work to pull the accounting timetable forward, and what I propose to do is stick to that timetable. So we'll still be ready to have a statement of accounts by the end of May. it might not be signed off till the end of September, but it will be ready for approval. For audit by the end of May in the usual timetable. I mean, Helen might have some sort of comments on the next item in the report on the agenda. But yeah, we went through a lot of I think heartache's probably the right word to bring all the processes and procedures forward. And I don't propose to push them back again, because it does impinge on other areas of our work, like for doing the medium-term financial plan and things like that. So we, as far as the council's concerned, we're going to stick to our timetable as we are. It won't get approved until the end of September, but effectively we'll be doing all our work at the same time.
Thank you, Peter. Thank you, Councillor Cruddas. Well, if there's no more questions, we asked to note the key dates in the final accounts.
Sorry, Chair again.
Am I missed one? Sorry.
He always has his hand up again. Thank you.
Councillor Baldwin.
Yeah, thanks, Chair. It's just, if I feel we need the dates of the relevant audit committees to comply with Peter's diary of events. If we can get those as soon as we can, so that people can get them in their diaries early on. And I know there's lots of other things going on at the moment. But after all the hard work I know Peter and his team put in, it would be a shame to miss dates if people are away or they're tied up with other things. So just early notification of committee dates as and when it's possible, Chair. Thank you.
Are you okay with that, Peter?
Yeah, can I come and answer that one? Because again, it's in the next report, to be fair. What I've actually done to cause less confusion and sort of trouble as possible, I'm proposing to bring the audit, because it's an October audit committee, bring that forward from October to September, so it'll be like a month early. And I've put that into the committee timetable for members to approve that, really. So that we're not moving all of the committees, we're just moving the one committee from October to September. So you'll have like, unfortunately, it won't be like a linear one. It won't be like every quarter. It'll be like a 2-month one, then a 3-month, or a 4-month one. But yes, I appreciate what you're saying. We do need to move the audit committees, so we don't end up with specials all the time.
Thank you for that, Councillor Baldwin and Peter. I look more carefully now to see if there's any more hands up, and I can't see any. So can we move on to the, sorry, we asked to note the key dates for the accounts timetable. Are we all happy with that? Yeah, thank you. So the next item is item 7, which is the independent review into the oversight of local audit and the transparency of local authority financial reporting, starting on pages 61. Peter?
Yes, thanks for reading all that out, Chair. The title, it's quite a long title, like highfalutin title. Just to give members a bit of background, it's in the summary there. In June 2019, the government actually asked Sir Tony Redmond to conduct a review of the arrangements in place to support the transparency and quality of local authority financial reporting and external audit, including those introduced by the Local Audit and Accountability Act 2014. This has now become known as the Redmond Review. That long title there, everybody calls it, in financial circles, calls it the Redmond Review. So this report that I'm bringing to sort of members summarises the findings and recommendations of the review and the subsequent government's response. The review was to examine the existing purpose, scope and quality of statutory audits of local authorities in England and support and regulatory frameworks. Basically, what Sir Tony Redmond was asked to do was have a look at the overall audit process and any subsidiary areas around it. One of the main drivers was that in 2018-19, 40% of all audits weren't actually approved and audited by the statutory deadline, which was at the time was the 31st of July. Hence, one of the reasons we're coming onto this, they want to move the audit date back to September every year. That's only for a minimum period of 2 years, and they're going to review it again. And so Helen's on the call, and one of the reasons that they've been asked to look at this because 40% of the audits weren't actually completed. It's not down to the fact that it's a bit of a combination, really, and Helen will keep me right if I go wrong. A lot of Helen alluded to that when she was on about the annual audit letter, the fact that they're asking for more, not asking for more money, but they're underfunded in local authorities. for the audit, the external auditors. So one of the things that they've done is they've asked for this to review is actually reviewing that, and I think one of the recommendations will be that there'll be more money put into the system, as like Helen alluded to there, the PSAA, sort of the £25,000 that Helen's identified for 1920. That'll become commonplace, that, and that'll be the new base. But again, I'll come on to that shortly. The review examined the effectiveness of local audit and its ability to demonstrate accountability for audit performance to the public. What happened was there's actually 23 recommendations coming out of the report, and just for members' attention, I've actually attached the full review and the recommendations in Appendix A and the government's response. It's only limited response at the moment. They're actually going to give all of their response in spring 2021, so they're in Appendix 2. But I thought it was pertinent to actually bring the most important ones to members' attention that affect the Audit Committee itself. So I'll go through, there's only a handful, but I'll go through each one and how it would affect us and what we think the response would be. Recommendation 4 is that the government, and this is important to the Audit Committee, the governance arrangements within local authorities be reviewed by local councils. And what they're proposing is that the external audit produces a full annual report to full council. Now, we don't know what that format's going to take yet, because they've come to these recommendations and the government have agreed it, but the working...
You've frozen, Peter.
Qualified to the Audit Committee. Now, when I say independent member, that's not actual, might not be a councillor. When I'm saying a member, I'm just meaning a member, somebody can join the Audit Committee. That's just their terminology. So presumably it could be somebody from the commercial sector or whatever who has a bit of experience in audit. To see if that would add, and I don't know what members think on that, but it's something that the recommendations have come to. And also the formalising the facility of the Chief Exec, the Monitoring Officer, which in this case would be Luke, and the Chief Financial Officer, which would be Elizabeth, to meet the key audit partners at least annually. Now, just to give a bit of background to that, and Helen's here as well, she actually meets the Chief for the Managing Director, in our case, the Managing Director and Elizabeth quarterly anyway. So that's not really something that's anything major change to us. All he would need to do was just involve Luke, I think, to make that one work. Recommendation number 6, the current fee structure for local audit be revised to ensure that the adequate resources are deployed to meet the full extent of local audit requirements. Again, that's going back to what Helen alluded to in her report. And what the government have said, they've agreed to this, and what they've said, they'll actually put an extra £15 million into the system. Because, again, Helen alluded to the fact that management, as i.e. Elizabeth, has actually agreed to the extra money of £13,000 for any COVID-related ones, which she's actually refused to pay, not refused to pay the 25,000. She's referred it up to the PSAA for their recommendations on that. What the government is saying, right, you're right, but we actually took money off you 3 or 4 years ago when Councillor Curtis mentioned there that we reduced the time, so that they reduced the audit fees as well. So we actually got money took off us because the money went down. Now they're proposing to increase the audit fee, so that it's only right to actually give us the money back. So they're going to put £15 million into the system. Now, as a rule of thumb, if the government put £15 million into the system, we would normally get about £30,000 there. So that would effectively cover the amount of money that Helen was mentioned in the annual audit letter. We don't know exactly how much we'll get, because that will come out at a later date. Recommendation number 9, external audit recognises the internal audit work can be a key support in appropriate circumstances where consistent with the code of practice. I mean, my thoughts on that is that this is welcomed really, because I mean, Audit Committee do receive regular updates, and Andrew's got one on later on internal audit work. So this can only help to sort of cement the relationships we have. This is recommendation number 10. This is the one where the deadline for publishing audit local authority accounts be revisited with a view to extending to the 30th of September from the 31st of July. that again, as we've just mentioned in the last one, in the timetable, we would hope to sort of keep our timetable as it is at the moment. So we would still have our accounts already effectively finished by the end of May, and then it's down to Helen's team, and it's mostly the availability of fully qualified auditors, I think, from Helen's point of view, to actually provide this, because obviously Helen doesn't just audit us, she audits a whole spectrum of people, including the NHS and other bodies. So it's fit them all in with the appropriate numbers and the capacity. But again, going back to what Councillor Baldwin said, I've actually asked for the Audit Committee to be moved from October to September to fit in with the required timescale, so we don't actually have an extra special Audit Committee. It's only 1 month sort of bringing it forward. Recommendations 19 and 20 really go together. It's a standardised statement of service, information and cost brief prepared by each local authority. Now, this might not seem important, but I think it's going to have to be audited, so there's going to be a report that would need to come to Audit Committee to explain what's actually being done. Again, there's no details on that at the moment, but we'll just have to wait and see what happens. And recommendation number 22, which from my point of view is pleasing, that they're going to ask Tony Redmond has asked SIPFA LASAC, which is the governing body, to review the accounts with the view to sort of taking out any disclosure notes or any items that the field doesn't add to anything. So it would be less work for us, if you like. So that's all I wanted to go through. All of the recommendations I think is pertinent to the Audit Committee, and I'll sort of take any questions, Chair.
Chair, you're on mute.
Yeah, thank you. Councillor Cruddas.
Yeah, thank you, Chair. In one of my other hats, I sit on the TVCA Audit Committee, and we've had some presentations in the last couple of weeks about the impacts of this, and they already have a legal man and an accounting man sitting as independents on the Audit and Governance Committee. But part of that training sort of revealed the spectrum of responsibilities that we as members actually have, which was not frightening, but it was a long list of things that we're supposed to be competent in. And it highlighted the fact that the government are now looking to actually do some competence surveys on the members to make sure that the spectrum of knowledge they have is sufficient to sign off things at the Audit Committee. And I know the Audit Committee isn't such a new body, and clearly Peter knows that in the area of the accounts, some of us struggle to work our way through them, and I think we've always said we would like a little bit more training in sort of interpreting the accounts. Obviously, if there have been recommendations to make them a bit simpler, that would be helpful. But I just wanted to, the idea is that members will now have to sort of put forward competencies, and we'll have to sort of shuffle people around to make sure we have all of the sort of corners of our responsibilities covered, which is a new recommendation, I think, isn't it, Peter? Yeah.
And I mean, just to answer that, Councillor Cruddas, I know the chair's actually asked for extra training anyway, so I'm in the process of trying to put more training on for things like the statement of accounts and things like the prudential indicators, which is later on the treasury management side. So that hopefully would sort of help members understand the nuances of the accounts and the treasury management side a bit better.
Yes, I would agree with that. Everything that's been said, I think it's so important. It is very complicated, and I, for one, at times, if I hold my hand up, get out of my depth. But so any training would be advantageous to us all. Councillor Baldwin.
Okay, thanks, Chair. I would agree with the training. I mean, who can ever forget when IFRS came in? My goodness. It was like a 700-page book, and none of the officers understood a lot of it. But we managed to work our way through. But training will be the key, I think, to moving forward, and we'll be held more responsible, I guess. And I think it'll be critical as to who we choose as the independent member in order to keep. I mean, thankfully, this committee never gets political. we need to keep it like that as well, because we're trying to show the outside world that we know what we're doing and everything's above board. But the training is going to be a big key to the future, I feel. Thanks, Chair.
Thanks very much, Councillor Baldwin. Very, very, very true. Just put a few spanner in the works. Going back to Helen and Peter, I think when I read this, there was two comments which came out on the page 140, the conclusions, which I took in water, and I quote 9.1, which is from the Redmond report. It has become increasingly apparent that the current local audit arrangements fail to deliver. And on 9.4. However, the key challenges is the underlying weaknesses of the current arrangements, where there is no coordination and regulation of local audit activity. Putting you both on the spot, how would you feel those two comments meet, our audit committee and the way we do things from the financial side of the council?
I mean, if I can go first, Chair, from a personal point of view, we have no problem with anything like that. Everything that we need from EY we get, and I don't think. I mean, like I said, I alluded to earlier, there's 40% of the audits haven't been signed off because they were nowhere near. We don't fit into that category at all. We've always had a good working relationship with EY. And we've always sort of been at a point where everything could be signed off on time, and there's no disagreement or anything on that. So I think we sort of quite in a one might be potentially Helen know better because she has more clients, but we're in a unique position where hopefully we're all right. I would say that. I mean, Helen hopefully will be up.
Helen.
Yeah, I would completely agree with everything.
Get my vote, Peter.
In terms of the situation at Darlington, I would completely agree with Peter. We've been able to stick to the agreed timetable, and everything has been relatively smooth. I think what's being talked about in the context of the Redmond review is the sector as a whole, and the Darlington situation is not mirrored across the sector of the whole. Is that the blunt reality of the situation. Peter quoted the stats from the 18-19 accounts, which was, over 40% didn't get signed in terms of when they were supposed to get signed. That situation just worsened for 19-20. So at the end of November, there was less than 50% of the audits for local authorities that had been signed off at that point in time. It doesn't take a rocket scientist to figure out what happens then. You've got a big backlog entering into the 2021 financial year, and you've got the whole country in lockdown, people working remotely, more people going off sick. I mean, it's just an absolute perfect storm. So if I sat here and said, I anticipate within the next 12 months this situation will be resolved and we'll all be back on an even keel, I'm not sure anybody would believe me, and I wouldn't believe myself. There is huge pressures in the sector and this regard, and those are the sorts of things that the Redmond review is highlighting, Chair.
Thank you for that. It is quite satisfying to hear that anyway. Councillor Derham, do you have your hand up?
I did, Chair. Thank you, Peter, for going through and slicing and bringing the more pertinent points of that report to us. It is very, very meaty. This is just really probably pedantic, to be honest. In terms of 7.2.5, it makes reference to the accounting code. And obviously this will be a document that probably hardly ever gets updated anyway. It just gets a new date stamped on the front of it. I was just wondering, does Darlington purchase it every year, or is it a case of it just naturally flows through from CPD, that sort of thing? No,
we actually, to be fair, I don't actually buy. I shouldn't say this in front of Helen. I don't buy the accounting code. We actually buy the guidance notes which surround the accounting code. Because as it say there, we get an online copy. It's like £700 for the accounting code, but the guidance notes around the accounting code tell you how to actually, how you can actually put the put the guidance around what you're supposed to do. So we buy that, but that's about £1,600, the guidance notes.
Mm-hmm.
But it incorporates the accounting code anyway.
Okay.
So yes, we do get it every year. I've actually purchased it for this year.
Okay.
So
thank you.
Thanks, Councillor Derham. Just one more question, Peter, on the independent member. How far down the line are we with that? Is this a cabinet decision and so on and so forth? And if so, is it being discussed?
To be fair, Chair, I don't know yet. There's no more details out on that. All the government's recommendation is that they agree with that. So we're waiting to see for any information. So we don't know where we're going with it at all. I mean, well, obviously I'll keep the members informed on what we need to do. But until we get any more recommendations, we don't know how we're going to carry out the interview. I mean, Councillor Baldwin mentioned there about the Audit Committee actually affecting the interview and the person to get it. I don't know how that's going to work, or whether they'll be appointed from the cabinet or from the government. Yeah. We don't know yet until we see the details.
Okay, could be a good job for a retirement job for you, Peter. When you retire, you can come and do it for us. Huh?
I wasn't thinking like that.
Thank you very much for that. No more questions, members. So can we, it is recommended that members note the contents of the report. Are we okay with that? Yep. Moving on to item 8, the mid-year risk management update by Lee Downey, please.
Thank you, Chair. So the purpose of the report is to update members on the Council's approach to and the outcomes of our risk management processes. And in summary, positive progress has continued to be made around managing the key strategic risks and the operational risks that officers are dealing with on a day-to-day basis. But as you would probably expect, I think we've got more risks above the risk appetite line at this time than certainly any point in the last few years, and we'll have a look at some of those as we move on. So in terms of a background, the report just sets out that risk management is an essential part of effective and efficient management, and it strengthens our ability to achieve our objectives. And wherever we have any risks that arise, we need to ensure we've assigned someone to manage those. And they're plotted on a standard likelihood and an impact matrix, which we'll have a look at in a little bit. And any of the risks that are above the grey area are above the risk appetite line, and those have someone kind of allocated to manage those. And where they are above the line, we have a more detailed explanation of what the local authority is doing to manage those risks. And they're set out in paragraph 8 starting on page 159 in your pack. So I suppose the best thing to do really is to have a look at these first. Like I said, we've got more above the line risks at the moment, and that's as a result of the global pandemic. So the first one we can see there is C18 COVID-19, split into 4 elements: so the health and safety of the council's workforce, the health and safety of the public, the impact on the economy and the population, and the financial impacts on the council as a result of increased costs and reduced income. So in terms of what we're doing to manage these risks, they're set out in the 2 paragraphs below. I won't go through it in detail. Obviously, you can see them for yourself, but there's lots of work ongoing to try and mitigate the risks, working with partners, including the government, TVCA, and kind of getting involved in the community testing, or really leading on that and supporting the rollout of a vaccination programme. So that's on the corporate risk register. As we move into the department, we've got 2 risks above the line in children and adult services, not really directly as a result of COVID, these ones. So the first one's inability to contain placement costs for looked after children, and we're doing some work around that in terms of looking at different provision, trying to bring provision closer to the area in terms of foster care, residential care and specialist provision, and working with partners on a local, regional and national level where that can add value. The second risk that's above the line for children's is increased demand for services impacting negatively on the budget. So again, there's a transformation programme underway around that, with input from colleagues in Leeds City Council under the Department for Education and Strengthening Families programme. And although that programme is due to end in the next 6 months, the ethos of that work will continue. We have a further one in Children and Adult Services, which is around failure to respond appropriately to safeguard vulnerable children in line with national legislation. In terms of that, we've got services in place to screen contacts and respond appropriately. It is a multi-agency approach, and we ensure our staff understand, the processes robustly. There is an element of the pandemic that's impacted on this risk, in that obviously children are at home more, they're not necessarily in school, they're not being seen by people as much as they would have been pre-pandemic. So each child that's opened had a risk assessment in place to determine the level of safeguarding need and appropriate visiting frequency. And, they are being visited by children's teams to ensure they've got appropriate safe living environments, and that services are put in place to meet their needs. So as we move through the department in relation to economic growth and neighbourhood services, we've got 2 risks that are above the appetite line here. So significant impacts arising from a reduction in available cash resources to the local economy, Council's general fund and housing revenue account, and businesses due to the impacts of increased levels of unemployment and universal credit. So to take account of that, the Council's increased bad debt provision. And the other risk that's above the appetite line in economic growth and neighbourhood services is our inability to cope with significant increase in homelessness cases due to the requirements of MHCLG to accommodate everyone irrespective of the status in order to limit the spread of COVID, and also increased levels of homelessness due to relationship breakdowns and financial difficulties. So we're working with MHCLG and the People's Commissioner to attract additional funding to commission new services to manage that risk. In relation to resources, there's no risks that are above the appetite line. So they're the strategic risks, really. The next bit of the report covers the operational risks, which I won't go through in detail, but it details all those risks that officers are dealing with on a daily basis and what the local authority are doing to mitigate those. If we move, so in conclusion, the Council's proactive approach to risk management continues to produce positive results. If we move down to page 166, that's where the risk matrices are that we referred to. So the first one on page 166 of your pack is the corporate risk register, and the grey area I referred to, you can see we've got risk number 18 there. That's the COVID-19 risk we mentioned. It's sitting above the appetite line, and obviously we're working to bring that below the line. There's no other corporate risks in particular that I wanted to draw your attention to. The next matrix on page 169 is a children and adult services matrix, and you can see the 3 risks we discussed as being above the appetite line as shown, then the shaded area there. Again, there's no huge changes there that I wanted to draw your attention to. Economic growth and neighbourhood services on page 174. Again, we can see the 2 risks that are above the appetite line, but there's again no movement in terms of the other risks. And if we move to page 178, resources, although we don't have any risks above the appetite line there, I would like to draw your attention on page 179 to risk RE2, fraud in general. So that's reduced from C3 to D3, and that's due to low incidences of fraud and the sound systems that we have in place. So it's recommended that the risk management report be noted, and I'd be quite happy to take any questions, Chair.
Do members have any questions? No, I don't think so. Just a general one.
Sorry, Chair. You put your head down. Councillor Durham's just quickly put his hand up.
Councillor Durham.
Thank you, Chair. Due to the restructure, the management restructure, will there be a change in the officers who are responsible for managing the various risks?
Not necessarily the officers, some of them. So obviously, if when Paul leaves, some of the corporate risks are assigned to Paul Wildsmith, so they'll be assigned to the new chief executive. So there will be some officer change, but also the layout of the report will change. So the registers here, children and adult services, economic growth, neighbourhood services and resources, reflects the current structure of the council. So if the structure does change, we'll need to update that to reflect the new structure council.
Okay, thank you.
Yeah.
And this is maybe a question for Peter. I know this is obviously be a moving piece, but in terms of any changes to the risk around economic growth, council tax, non-domestic business rates, have they been already factored into the MTFP?
Yes, they have. Yes, yeah. The MTFP is going to Cabinet on the 9th of February, and all of the risks have been factored into that.
Okay, thank you.
Councillor Credas.
Yeah, it's just nice to see that the risks that we've identified are the ones that are reflected across the whole of the public spectrum. You know, clearly our officers have identified the risks that are talked about every day in the public area, so that it's nice to see that our risk assessment system actually reflects the true problems that people are having at the moment. That's all, really.
Thank you.
Thank you. Just on the subject of risk, I tend to think of risk as a forecast, if you like. In other words, people sitting down and then saying, well, you know, with the certain circumstances, this could happen. The emphasis on could. I mean, have we got any evidence, Lee, that we're actually on the ladder now of going up that risk ladder?
Well, in terms of certain risks, so the one I referred to around fraud, Andrew's provided the narrative on that. So we're going up the ladder there, in that risk's been reduced because of the low incidences of fraud and sound systems in place. If we look back over the last couple of years, information governance was the only above the line risk we had pre-pandemic, and we did a lot of work to bring that, below the risk appetite line. So we do see that. We do go up that ladder, as you put it, and we do work hard to manage the risks and bring them down to an acceptable level. But like I say, obviously at the minute, certainly since I took over this area of work, we've got more risks above the appetite line than we had previously, which is to be expected, really, given we're in a situation that is hopefully will only occur once in our lifetimes. So obviously, hopefully we'll see over the coming months as the vaccines rolled out and we move into the summer that the risk around COVID certainly will start to come down, and the impact that's having on other areas will reduce.
Yeah. Thank you very much for that.
You're welcome.
Members, it's recommended that the risk management report is noted. Everyone okay with that? Yeah. Thank you very much, Lee.
Thank you.
Moving on to item 9. The Prudential Indicators and Treasury Management Strategy Report for 21-22, starting on page 181. And Peter, you're picking that one up as well.
I am, Chair. Yes, unfortunately, I am. This report outlines the Council's prudential indicators for 21-22 to 23-24 and sets out the expected Treasury operations for that period. If I can just refer members to page 184 in the pack. The Council is required by legislation to receive and approve as a minimum 3 main reports each year, which incorporate a variety of policies, estimates and actuals all around the Treasury management function. This report, which is the first and most important report, is forward-looking and covers the capital plans, a minimum revenue provision, commonly known as the MRP policy, the Treasury management strategy and an investment strategy. I'll go through each of those areas as I go through the report. So going to Table 1 on page 185. This is a summary, Table 1 and Table 2 on the following page. This is a summary of the key prudential indicators and limits that are through the report. So I've brought them all together in a summary table so members can see them at a glance. The first one I mentioned there was the capital expenditure, the capital plans. Now on Table 4, which is on page 187, it shows the financing of the capital programme. So we've got we've got the projections there for our capital programme for the next 3 years. Just for members' clarification, when we do a medium-term financial plan that Councillor Durham mentioned there, we actually do that for 4 years. But when you're doing the Treasury Management side, you only have to do it for 3 years. So there's a slight imbalance there of one year. But the statutory things, you only have to do it for 3 years. So for the next 3 years, I've got the capital plan set out and how those capital plans are going to be financed through grants or capital receipts or any other sort of funding from revenue contributions. And as you can see at the bottom of that table, table 4, when you take the capital programme and you take off how it's going to be funded, there's a balance there. Now it's called the borrowing need. So because we're actually getting funding for all of the other things from capital receipts and from capital grants from the government or for any other, like the RDF bodies, there will be an element of where we need to fund them ourselves. Now, so that gives us the borrowing requirement at the bottom, the borrowing need. And in 21-22, which is the next year, it's 17.7 million. And it's 12 million, then 11 million the next 3 years. What that is, the borrowing need there is, it's mostly for housing. Because we've got in the housing capital programme, again, that's been approved, there's provision in there to build houses over the next 3 years, to build more social housing for us. Now, as members are aware, from the housing revenue account, that's ring-fenced from rents and obviously for borrowing as well. So we'll end up borrowing, if we build enough houses, we'll end up borrowing to fund that. So that will, again, it will all be covered within the HRA. It's all already built into the HRA going forward, the potential borrowing costs of that. Moving on to page 188, the capital financing requirement. This is the second prudential indicator, and what the capital financing requirement is, it's all the total historic outstanding capital expenditure we haven't paid for yet, effectively. So it's effectively all about outstanding debt with the council that we're paying for over the next, well, in theory, it's over the next 50 years or the lifetime of any assets that we build. Again, just for members' clarification, the CFR, I'll call it the CFR, which is a capital financing requirement, it doesn't just go up infinitum. It actually, what you do, and it comes on to the next one, the MRP policy, the minimum revenue policy. It's a bit like if you get a bank loan, you pay principal and interest. Now, all the way through every year, we pay the interest over to whoever we borrowed the money off. But we also have to put money aside through a minimum revenue policy to put into the revenue account. So we actually put money aside to bring down your debt, if you like, to fund that debt. So again, in the medium-term financial plan, there's amounts built in to furnish that debt for the life of the plan. Moving on to page 191. On the Treasury Management Strategy, what I've done there on Table 7, the Treasury Portfolio, what I've done, this is a new table which I've put in. And that shows our investments, where the money we've got invested in different organisations, and also offset against our borrowing. So it actually shows the net Treasury borrowing, if you like. So at the end of March 2020, we had a net Treasury borrowing of 124 million. So our debt was 124 million. At the end of December, just gone, it was down to 109. Now that's because we've been getting that much money in from the government, from a cash flow point of view. What I've been doing, I've actually been repaying debt rather than storing the money in a bank account, which we get nothing for it at the moment, the bank account. I think our in the money market funds that we use, which you've got at the top there, money market funds, our interest rate at the moment is 0.01. The bank, just to put it in perspective, the bank rate's 0.1. But our money market funds, we get an interest rate of 0.01, so it's virtually nothing. And some of them are nothing, actually, so I try not to use them. But that shows that our debt is actually coming down and projected to come down. That will go up again from what I've just said before by housing if we start borrowing more money for housing. On Table 8, on page 191, it shows the gross borrowing to the capital financing requirement. So it shows all of our gross debt against our capital financing requirement. As you can see on the bottom of that table, we under borrowed there. Now what under borrowed means is technically we've got all this outstanding capital expenditure. Like if I take, for example, 2021, we've got £218 million worth of outstanding capital expenditure, but our debt's only 185 million. So we haven't had to borrow to fund all of our debt because we've been using internal reserves rather than borrowing to that. So that's a good position. That's held the council in good stead over the last few years, and we continue to do that. Moving on to page 192, two potential indicators are the operational boundary in table 9. Now this is the limit beyond which external debt is not normally expected to exceed. So members do need to approve that. But the more important one is the authorised limit for external debt, which is in table 10. Now that is the limit that we can't go over. We set that with a bit of headroom. As you can see, we're 5% headroom in that. We can't actually borrow more than that. And we don't actually borrow up to that limit, like I said, I mentioned earlier, because we under-borrowed. If I can move on to page 197 in your pack, please, just to finish off on the annual investment strategy. Now, the council's policy has been and will remain that council's investment priorities will be security first, liquidity second, and then yield. I would always, when I'm putting money anywhere, we always look for security. Going back to Icelandic banks a number of years ago, this council didn't have any in Icelandic banks, by the way. The government sort of changed the rules, and it's always security first. So we always look for security. We don't look for making money on anything. We try to be secure and have your money liquid just in case you need to pay it out at a push. We have very strict criteria on sort of who we invest money with and who we borrow money from as well. And it's all in the appendices there. So with that, Chair, I'll take any questions if possible, please.
Members, any questions? No. No. Okay. Members, it's recommended the Audit Committee examine the following and pass on any comments to the Council via Cabinet, and that we approve them. The Councillor Credis? You're on mute, Paul.
I thought you were taking a show of hands to approve it.
Yeah, I am. I was going to read them out formally. Councillor Durham?
Agree.
Okay. Is Councillor Baldwin with us still? Okay, thank you.
No, Chair, he's had to leave the meeting.
Thank you very much for that. Moving on now to the Audit Services Activity Report on pages 221 for Andrew.
Yes, thank you, Chair. I've changed the format of this report slightly from previous versions to try and incorporate some additional information we can provide. So I'll go through each section in detail. So if we jump straight to the appendix, the first page we have there is a risk summary. So a link to what Lee was talking about earlier, one of the reasons why we updated our processes and what we look at was to try and support the risk management process. So what we have here is some assurance levels against individual risks on the risk register. So at the moment, there's a handful on there that have got an assurance level. Over time, we'll obviously be testing against the other risks on the register. But as of now, we've only managed to cover these areas. In general, things are looking okay against the risks. But we do have one risk where we didn't have 100% assurance, and that was the delay to the new local plan. And I think that's reflected in the risk report further up. So again, this is just to try and enhance members' view of where we are in terms of risk management, to provide a different level of information and some assurance that the risks are actually being managed. The next section of the report is the theme summary. So this is where we try and break down the results of our work by key governance theme. So again, we've got an overall assurance level as well as the details of the red, amber, greens and the impact rating of those controls. So all the ones we've tested so far are coming in at over 70%, which is our benchmark for substantial assurance. So there's no issues to note there really for members at this moment in time. The next section, again, we just slice and dice our work in a different way again. So this time we're covering it by service area. So it's slightly different to the previous section, and it's more functional service areas within the council. So what we've done here is we've got a breakdown of the work we've done in the last quarter. We've got a breakdown of the planned work over the next quarter, and then a full list of the controls we're going to be reviewing. Again, there's nothing really to bring members' attention to there. It's just for information around what we've done and what we're going to be doing. Then the last section, I believe, is the balance scorecard. If I can get to it. So this is how we monitor the delivery of the audit service. The key indicators to note on a quarterly basis are around whether we've got adequate resources, whether our coverage is adequate. They're the two main indicators to keep an eye on a regular basis. So as things stand, in terms of coverage, we are slightly behind where I'd like us to be. Like everyone within the council, we are trying to operate under difficult circumstances and also trying to liaise with other officers within the council while they're also dealing with difficult circumstances has led to some delays in some of the work being completed. But that work is still factored into our forward plan, and that's saying that we have adequate resources to deliver that forward plan. So I am expecting this next quarter to get caught up on that outstanding work, which will enable us to give an annual opinion at the end of the year. I think they were the main points I wanted to make. I'd take any questions.
Sorry, I was on mute there. Councillor Durham.
Thank you, Chair. Just so I understand, Andrew, in terms of frequency, so where it says 6, that would be 6 times a year, 24 times a year.
Sorry, no, that's in terms of months. So 6 is every 6 months we'll test that.
Right. Okay, understand now. Thank you.
Thank you, Councillor Durham. That's a question I was going to ask. But just to simplify things for me, on page 225, where we have the risk summary, and we have assurances on one side. You may have explained this, but I was looking through the file. Will you be filling that blank assurance square in at a later stage?
Yes.
At the moment, we've got 1, 2, 3, 4, 5, or 6 items.
We plan quite far in advance. So I think we plan up to 4 years in advance at the moment. So these other risk areas are due on the plan in future periods. So they will be getting done, yes.
Right. So we'll simply have, so every meeting, those will be filled in as you look at them, and obviously be based on priority, I would imagine.
Yes.
It's good to see that although you have a backlog, you accept that there is sufficient resource, and hopefully bring up to speed by the next meeting, perhaps, as you said in the report.
That's definitely the plan, Chair.
Thank you, Andrew. No more questions. Recommended that the activity and results be noted and that the planned work is agreed. We all right? Okay. Thank you very much. Thank you, Andrew. Any supplementary items? None. Any questions to be asked? No. In that case, I'll close the meeting and thank everyone for attending. We look forward to seeing you again at the next one. Thanks very much, everyone.
Thank you.
Thanks.
Thanks, everybody.